I'm Riggs Eckelberry, co-founder, chairman, CEO of Origin Clear. The government needs to continue to provide a lot of abundant, clean water. But what happens to it after it's used, when it's dirty? Do you know that 80% of all sewage is never treated? It's just dumped. That leads to water scarcity, but it also leads to a lot of disease and pollution, the ocean turning into something horrible. At the same time, the cities and counties are not getting the funding they need to really treat the water, and so they can't keep up. The solution is let the people who use the water clean the water. Water on demand is investment in actual capital assets that earn income. Sign up to hear my weekly briefing every Thursday night, 5 p.m. Pacific, 8 p.m. Eastern. Just put oc.gold/CEO in your browser, register for the briefing, and I look forward to hearing more from you.
Hello, everyone. What a great Thursday. We have so many good things happening. Ken and I were just talking before the show about how things are just speeding up so much. Things are really coming true, and I'm going to give you some very good specifics in this briefing. So without further ado, I'm going to jump right in here. The 171st briefing. Yes, there's a new beneficial income asset, water. If there's one thing we do well as Origin Clear, it will have been to have created an investable asset for the first time called water. Yes, you can buy shares in, water companies, or you can buy municipal bonds, but nowhere can you invest in the water equipment asset than in water on demand, which I'm so proud of. So this week I featured a story. The Rio Grande is running dry. Now, to be clear, the southern Rio Grande has often run dry, but this is up by Albuquerque, way north, and it's just puddles. And as you'll find out shortly, a lot of this is due to the fact that we just throw away all our water. Now, the Rio Grande itself being dry doesn't come from us not recycling, but certainly the Colorado River going into Lake Powell and Lake Mead, that is a problem having to do a lot with consumption. And we don't recycle our water. Now, I'll tell you a bit more about this story in a second, but let me give you another piece of news. Long-term health issues in California. Now, let me tell you, I'm not singling out California. They merely happen to be reporting this, right? This is the canary in the coal mine. All of the states have this problem. But this report, which is in The Hill, which is that's the Washington, D.C. political Congress magazine, is talking about how there are more than 370 failing water systems across California for about 1 million people. And 2/3 of them are in disadvantaged communities, of course. So what is it all about? Well, there's the acting state auditor issued a report, and excessive levels of arsenic and nitrate, which can be very bad for your health. Again, this is some details about how it was all put together. And here is the real issue. They may say they can have a problem, but they don't have the money. This has been, I don't know why we spend zillions and trillions and billions and gillions on everything but municipal water. And so there's a gap. And this is exactly why we're doing what we do. The lack of fund compounds because there hasn't even been any performance goals or metrics. And of course, the longer they wait, the more expensive they get. And onward and downward. Not a pretty picture. So there's a timeline, but basically it'll go away. It's a terrible thing. All right. So sure enough, we issued an announcement this week that talked about the fact that cities are mandating on-site recycling. And this is a picture of our high-density polyethylene systems. This is a pump station that's being molded, and our systems are designed perfectly for it. They are decentralized. The very first one, Dan Early, came on board in late June of 2018. In July, I think 27th, we announced this first brewery program, and sure enough, we were off and running. Now, Dan had been doing a lot since before then. So he was toiling in the wilderness for a long time until he came along to join us. And even then, it took us a long time to get up to speed. Okay, there we go. We received purchase orders in 1 month that nearly equal the entirety of 2021. So that's really starting to rock. The rising demand for modular water systems to reduce the need for municipal sewage connections. And this is what's happening. This is the law that CNBC reported on. Every new building over 100,000 square feet must recycle its own water, toilet to tap. And LA, Denver, Austin, Texas, and New York City. I've been talking about this, but this was the big announcement this week. And it's great. But of course, we've been doing that for a while. We have a case study on our website about that cool thing we did in Pennsylvania. We've done a lot more. It's only one of many, but it's a case study that shows how it was done. And this dealership was able to relocate into inexpensive land by putting in place a closed loop black water system, black water meaning the toilet water. And of course, we talk about how water on demand can accelerate that. Now, here's a new statement of our mission. We're kind of restating everything. Once a government monopoly, clean water is going private. Driven by decades of governmental neglect and soaring water rates, local industries and communities are now treating and recycling their own water. That's good for business and good for sustainability. And now the innovative fintech, Water on Demand, is providing capital to enable this mega trend. For the first time, clean water has become an investable asset open to Main Street investors with the potential for generational royalties. And we are the Clean Water Innovation Hub for Water on Demand and for modular water systems, a leader in on-site prefabricated systems made with sophisticated materials that can last decades. I'm going to tell you more about these sophisticated materials. You're going to love it. So I want to show you a draft of our Q3 shareholder letter, but just the first part. There's a cliffhanger. So again, I talk about this problem with the million Californians and that I'm not running for office, so I can't fix the government, but our focus on the smaller local water user is paying off. And what follows here is going to have to wait because it's a major announcement. But let me just say this. From here on out, the current investment round for Water on Demand is going to become less generous because of the announcement that is applied here. And I'm just going to have to tease you on that. I'm sorry. It's just how it is. Okay, so we appeared on a podcast, and this is a very excellent podcast. And we were actually number 2 all-time popular out of 42 podcasts by this 5-star podcast by John Rickard. So let's listen to what was said that was so popular.
Good morning, afternoon, or evening, depending on when you're listening to this. This is John Rickard, your host, as always, of the Wealth and Freedom Nexus podcast. And today I actually have on Riggs Eckelberry of Origin Clear. And this might kind of surprise a lot of people. You've probably heard, investment opportunities in, real estate or crypto or precious metals or oil and natural gas are going up quite a bit as we are recording this episode, but this is actually a kind of boring topic, if you will, and this centers around water. And you might be asking, well, how do I invest in water and what's all this about? So with that, I'm just going to pass it on to Riggs to do his introduction and tell us how we can invest in this asset class. So Riggs, welcome to the show.
Thank you, John. Right now, we have a situation where, runaway inflation, Jamie Dimon claiming that, we're going to have a hurricane. And I think another person I read today says it's a storm on top of a storm.
Yeah.
So we have a lot of situations. And essentially what we're looking at is a macro, change from currency-based finance to commodity-based finance in general.
Okay.
So he who has a commodity is, basically is in good shape, which is going to be a tremendous realignment for all of a sudden Gabon is going to be a very powerful country because they have, lithium or whatever. In other words, countries that didn't have good currencies but have good commodities all of a sudden matter. And so that means in general, there's basically in an inflationary situation, the only safe ground is not risk assets, but hard assets and hard assets that earn residuals. So you want to make money from your gold is great, but I've got gold in my safe. So what? There it sits, right? So you want assets that produce and are yet not likely to lose value because of sentiment or markets. Real estate is, for example, is a great asset, but there's a lot of value add from the market's perspective. How much utilization does a commercial mall have, right?
Yeah.
Or things like that. And of course, we've seen how that can go south. So you want to look at an asset that is solid and can yet make money. And then you say, well, what about oil? The problem with oil and gas is that it's highly political. In fact, investments being withheld from the oil patch because investors are not very comfortable with the politics involved. They're like, you know what? They could make us close our wells any day now.
Yeah.
Right. So oil is very fat right now, but it's politically risky. Gold and precious minerals. Yeah. Okay. Lumber was great, but now it's fallen apart because finally the housing boom's tapered off and the price of lumber has fallen off a cliff. So these are all assets that the reason why they're difficult now is because they've been around for so long and they're kind of at their top. And so just like the price of Apple stock, there's a time when it comes down again, right?
Yeah.
Now, water has never been an investable asset. And the reason is it's always been centralized. Big, the government will take care of you. We'll build these big central plants and we'll handle everything.
Yeah.
That contract has fallen apart. Increasingly, businesses are being told, treat your own water. We can't take for example, breweries, which have a lot of effluent, very low they're not toxic effluent, but there's a lot of it. Typically, they have a big problem because when they expand, they start overwhelming local municipalities. Municipalities say no. And one particular brewery started having to truck its effluent to another county. And
oh, geez.
And so then they're stuck with, we're just going to have to treat our own water because the cities are saying you can only give us treated water. Now, this is not a problem that consumers are aware of because, frankly, the cities they can't stop taking care of what's being flushing down your toilet, and they're going to have to take it. So there's a minimum level of service that the consumer is being served with, not well. Coming water into my house, I have to filter it. You know that. But nonetheless, there's a breakdown of central infrastructure that because it's overwhelmed. And what makes it worse is that there's been a big migration the last 2 years. And the numbers just came out. New York lost, I think, $20 billion worth of taxable income in the last year from migration. So a lot of migration to secondary cities, and which is good. And it's healthy because it kind of redistributes everything. But that's even, you move to a place like Clearwater, Florida, they're not geared up for a massive influx. They're accustomed to a certain level of water treatment. And so you're overburdening rural, semi-rural, exurbia type locations. All of this adds up to a perfect storm for water and an opportunity for private water treatment.
Okay.
Now, what I mean by that is helping businesses and industry and agriculture cope with the problem of treating their own water, which is a growing problem. And these businesses also learn that it's a way for them to limit water rate increases, which are inflating it. In over a 10-year period, they end up 3 times core inflation. So that's not great. So that's a good risk management for the business. Also, they can recycle, therefore use the water they paid for more than once. In a brewery, that means, for example, that even just using it for washdowns and steam vessels, you can reuse about 50% of the water in your own plant without even making beer from it, because not everyone's going to love beer made from effluent.
Exactly.
Not that it's bad, but
maybe after the 10th beer, they won't notice it or something. But
what depends on the beer, right? Sometimes it might be an improvement. But anyway,
very true.
That organic thing I can taste in the back. But anyway, so it's a good proposition for businesses. But here's the problem. I've got a brewery. I make beer. I invest in, brewing vessels and all that stuff. I don't have capital for water treatment. That's not my business. So where's that $1 million going to come from? I got to go to the SBA, this, that. And as a result, we learned this because we built a business around serving those people. But we noticed in early 2020, there was a tremendous backlog of unfunded prospective jobs, more than $45 million worth of jobs just stacked up there. And what the heck is going on? And because it was COVID, COVID was great for taking a look at everything a second time. Let's look at our business model. Yeah. And we went, you know what, we got to do something. And we figured out, well, why not help with the finance, right? And so fast forward to late 2021, we had built a fintech that basically closed the loop and said, look, you're a brewery, sign here, you'll get your water system fully maintained. It's water as a service, paid by the gallon, just like you're used to from the city. It's a fully turnkey solution. A box will show up in your brewery and put it in the corner and you'll be fine.
Okay.
And that we called Water on Demand. That's our program.
Okay. And
first time investors can invest in a water system the same way they can invest in an oil well, i.e., there's this thing called, many of your listeners know about master limited partnerships in oil. That's been around since 1981. Today, it's a $300 billion market, about 60 of these MLPs. And what they are is a basket of properties, mostly pipelines, but also oil and gas. And because they're a basket, there's a certain amount of risk management, as long as you don't do that mortgage subprime.
Right? the messy stuff.
if you steward it right, then you've got a package of good properties. And if one fails or one gets closed, so what? And so we did the same thing. We built these water on demand units, and we've been accumulating capital in those with the idea of, okay, now we're going to devote that capital. And because the machines remember only selling the service, therefore they remain owned by us. They're not leased. They are they're deployed on a use basis. Therefore, the asset remains with us, which gives the investor some security. It becomes an asset.
Okay.
So you've got treated water, and our investors get 25% of the net profits from this pay-per-gallon model. And it papers out beautifully. We've done the numbers, and it generally, and this, services are generally more profitable than product sales.
Yeah.
Microsoft learned that with Office. And, I pay $19.95 a month, whatever it is, for Microsoft Office. It's much more than I would pay for what I used to pay for it, but I get much better service. All the updates, and I got the cloud. I got this. I got it. It's basically they are my little IT department. In fact, we don't even what IT department. We don't even bother. Microsoft does such a great job for that $20 a month that it's well worth it. And that's how basically any kind of service pays off, both for the service provider and for the user, because it takes the whole problem off the plate. Thank you very much. And if the water's not clean to a certain standard, I don't pay at all. Right. So what we've done is we've basically taken this water on demand, and started to ramp it up, and we've actually begun to already roll it out as its own company. It's going to get crowdfunded ultimately onto the NASDAQ, Origin Clear being the mothership. And in fact, in the middle of all this, Origin Clear made a transition from being a company that was trying to bulk up with more and more and more value. But in the end, we started being like The Sound of Music, too many kids and one of them gets neglected, right? So now the new model is take all those valuable properties and launch them using proven crowdfunding techniques. And that's been done amazingly successfully. So not only is water on demand set up as a pure play, and here's the beauty of it. Water as an asset has not hit a top. It hasn't been anywhere. It's the beginning of water as an investment. Nowhere in the world can you invest in water as an asset. This is a first. Okay.
Interesting. As far as you had mentioned, obviously the investors and the company, it's a pay for use or pay for the gallon, and the box, if you will, like you said, it's kind of in a corner there. I'm assuming, since the ownership is still retained by the company, and then ultimately the investors, there's probably some depreciation or maybe K1 schedules that can get some tax savings as well for investors, or how does that work?
Well, the short answer is no. And the reason why is we started doing that in 2020. We're like, okay, let's, John can own a brewery system in Folsom, California. The problem with that is that there's a spider's web of regulation around investing in hard assets in this country. And so it's very hard. It's easier for people to invest in a basket of these assets. Now, what we do instead of delivering the K1 or or tax benefits, depreciation, all that good stuff, is we reward the investors with equity.
Okay.
First of all, piece of Water on Demand itself. So the first 10% of Water on Demand, anti-dilutive, is being handed out to the first $20 million raised. We've already raised almost $3. So let's say $17 million to go. That investors will get 10% of that. And then after the first 20 million, that's over. And in addition, they get equity in Origin Clear, the mother company.
Okay.
150% of their investment plus double warrants. So we've chosen to be very, very, since Origin Clear gets all the benefits,
Sure.
We give you a chunk of Origin Clear, basically.
Gotcha. Okay.
So, let's compare, for example, to cell phones, right? Now, cell phone tower investments are great, but all you got was you got the stock play, right? So, unless you were a cell phone tower, you owned the underlying land and you made money from the lease or whatever, you were a pure investor in a cell phone tower business, you played the stock. Well, here we have a chance to get a residual asset that you can enforce with the UCC to get that residual, and stock and warrants for the upside. So it's a great hybrid.
Okay. Interesting. Just kind of looking over here, Riggs, as far as from when Origin Clear started to now, has there been like any kind of metrics you can give us, like when you started, as far as like the pay per usage, I don't know, businesses were paying, 2019, there was 1 million gallons of usage a month or whatever a number is. And that's grown like 25% a year, or is there been like 500 boxes going out year one and that went up to 1,000 boxes, or, what has the growth or metrics been looking like for, investors that are interested in this?
Well, what we've pioneered is we have a division called Modular Water Systems, which we built from scratch in 2018. And right now it's running about $1.5 million a month in sales run rate. And it has patented technology for these water systems in a box, which is what you want. A, because you can repossess them. They're not like concrete in the ground.
Okay.
And B, they're in the corner, right? They're not obtrusive, and they're like plug and play. So what we've done is we've built that business on a conventional basis. There's 4 initials you should know in the water industry: is DBOO, design, build, own, operate. And so what we've been doing is design and build. And last year, our sales tripled in design and build. So we've had a big expansion in that area. But the problem with that is that your sales, water systems is like real estate. It takes a while to get it built.
Sure.
For example, in the middle of summer last year, we made a big $5 million sale to a power company. Well, that $5 million sale is going to take 2 years to deliver over time. And that's only then can you count the revenue.
Okay.
So on the, generally accepted accounting principles, revenue is recognized only when you deliver milestones, right? Mm-hmm. And so you make the sale, great, got the money in, part of it, and you keep getting paid. So, for example, we tripled our sales last year, but the revenue numbers stayed flat. Now it started the wave started to break. So Q1, we had a 50% increase in our recognized revenue, and it's going to keep growing. So that buffer effect is going to catch up. So our conventional business, DB, is very good. Now, we're now stepping into OO, own and operate, to make this water service work. So we're building that. This is what our investors are paying for, is the development of this new business. So what we can say is, look, we have a great reputation building systems. We really know how to do that. Now we're stepping into the finance game, and obviously we have been recruiting some outstanding finance people, world-class finance people to run that. And it's a challenge, but frankly, it's harder to build a water business than it is to build a contract management business, frankly.
Okay.
So basically what we're talking about here is water on demand sits at the intersection of the client and the builder. Because one of the decisions we made was, sure, we got a growing business over here in design and build, but we're going to raise money far faster than we could ever build those systems. We're going to quickly overwhelm our resources in Texas and Virginia these are the current operating centers.
Okay.
So what we decided is, look, water on demand is going to always, let's say you are in Atlanta, Georgia. You've got a housing development. It's off the grid. You want to connect it to, you don't want to connect it because it's $5 million. Instead, you want to just put in a self-maintaining black water system. So we go ahead and we say, okay, we'll finance that. And we find a local regional water company to build it and maintain it. So the person showing up to maintain it, we don't have to fly somebody out from Texas, local resources. And so what we decided to do is give up. And this is a huge departure from the rest of the industry that tends to want those hardware sales, right?
Sure.
Like, no, we're going to go ahead and give them away to local players. Now, what does that do? That's kind of like our supercharger network, right? In other words, all over America, people will have alliances with us who are getting bluebirds. Whoa, we just got a job from Origin Clear, fully funded, that to build a system and maintain it. We didn't have to sell it. And furthermore, they are a source of deal flow. I was talking to one of my long-time partners in California, and I told him our new business model, and he said, listen, I've got a golf course in San Diego that it is ready to go, but they don't have the $3 to $4 million to make it happen. Can you do it? I'm like, yeah, okay. So it's a source of business, of deal flow, and it's also a way to get those things delivered. So now we can run massive parallelism. We can have multiple projects going where we're financing. And we have certified partners on the ground building and delivering, and we license our modular water technology to them, and that standardizes the fleet.
Okay.
Beautiful thing, because now we get licensing revenue to our division modular water. It's all synergistic.
Okay. So in many ways, I guess how I hear that's kind of like a franchise model where, you go to one McDonald's in some place and go to another McDonald's, it's the same product, the same standards, shall we say, from one McDonald's to another. There isn't any variance. And that's kind of where the licensing, almost like a franchise, comes in to make sure that they're, all the same, so to speak.
Yes. I mean, obviously it's not literally a franchise.
Well, yeah, I was just trying to lay.
But you're absolutely right.
These are comparable.
These have integrated. They're basically integrators of your technology, and they're granted a license for that specifically. This gets because again, here's the problem with water or any other industry. One company cannot transform the entire industry. It takes a long time. I can think of one that has, which is Tesla, an amazing example.
Sure.
But I think Elon is, I love people who say Tesla's going to go bankrupt. I'm like, yeah, you go ahead and bet on that. Yeah. Good luck. Right. But in general, what you want is you want a group, you want a movement.
Okay.
So rather than us trying to sort of finance and build everything, and we sort of stay in a little lane, and then everybody else steals our model. Instead, we go, no, we'll be finance, and we'll be basically the MLP, right? Because MLPs don't do their own drilling or pipeline building; they just bundle the packages, right?
Sure.
That's all they do. And so, if we just manage the MLP, then we will be the investment market for water as an asset. And this water will be paid every single gallon paid for, which, by the way, takes us down the road eventually to being able to tokenize that water.
Okay.
In 2018, I tried to start a crypto in water called Water Chain. But the problem we ran into was there's no standardized way of pricing water. It's all over the place.
Sure.
And as a result, there's no water market. But once you've got water being paid for by the gallon, now you've got a standardized price. And eventually you can start having, through tokenization, you can start having transferability of assets. Like I decided to move my digital bond, my water on demand bond over to you because it's tokenized. I'm like, I just do a little address change, boom, done.
Sure.
And hopefully you weren't a thief. And then but, putting aside the horrible track record we have from crypto transfers, still, it's a very efficient thing. Now, where we want to go is we want to then build more water on demand set hubs in financial centers, Singapore, Dubai, London, Tokyo, that then fund water systems for their area. And we prefer to have a financial network than to have a equipment network that we built. Now, here's what's cool. We actually have a water equipment network because we own the machines that were built by someone else, and we own the contracts with the clients. That kind of puts us in the driver's seat.
All right. Well, thanks again, Riggs, for coming on. It was a pleasure to have you on the show.
Thank you, John. I enjoyed it myself, and you have a great rest of week.
You as well. Thank you.
I like to play this podcast because it's a chance for me to sort of, answer questions and live as opposed to sort of sitting here pitching them to you blank. So that's super cool. So with that in mind, I am now going to call on the inimitable Ken Berenger for the freewheeling discussion.
Good afternoon. Good evening.
Good evening, sir.
Yeah.
It's still afternoon in LA. Yeah,
it's like lunchtime, right? Isn't it?
Wasn't that cool? And by the way, I wanted to say this. Our good friend Ivan Ants is actually traveling America right now. He spoke about Origin Clear and Water on Demand at the High Net Worth Individual Mastermind in Nashville. He was on Entrepreneurs on Fire, which is the number one business podcast in the world. They have 3 million listens per month. And also he was on the Afterward podcast. And this week, he's going to be speaking at a high net worth individual event in Utah, and also a mastermind in Sundance, as well as a Philanthro Investors event in Denver. So he is very busily spreading the word about what we're
evangelizing.
Doing. We're so grateful for that.
So what's interesting is that now with the recent near completion of an investment of one of the wealthier people in Europe. We're working on that right now.
That's a brag. You got a brag going on here.
No, I didn't. Did I? No. It's just, he called me. I had a minute.
He said, "Do you know who I am?"
He said, "Do you know who I am?" I said, "Yes, sir. Yes, I do." No. What I mean is that I think the world. So you and I joke about this. We're sitting there texting at 11:30 at night because nobody sleeps. And we talk about the serendipity of how the world, all of a sudden, it's almost infuriating because all of these publications and all of these people are coming out and they're literally repeating verbatim what we said 3 years ago. And people went, huh? And you see that meme on Facebook. You have Leo DiCaprio. He's got the beer and he's pointing to the TV. That's like me. I'm like, wait a minute. I said that, so it's very, no, look, it don't get me wrong. Having really smart people that are completely outside of your sphere of influence validate what you've said. That's wonderful. And I'm glad that circumstances, albeit they are a little dicey right now, have kind of forced the world to look at water as the true asset that it is, and to begin making references that, hey, invest in water. And like you said, you could buy utility stocks. That was pretty much it. But people bought utilities for a reason. They paid incredible dividends. Why? Because there's a lot of money in power and water delivery, right? And so I tell investors, water has been this is not green technology that, they know it's going to take another 10 years to get really good at it. These advocate investors are doing it they're holding their nose and they're going, I'm going to do it because I want to prevent, they're true good people. I'm going to prevent human death in the future. I'm doing it for the right reason. I get that. They don't have to hold their nose here. Water has been profitable for what? Centuries, right? So it's very, very exciting. And I think that having Ivan speak to like kind of the ultra high net worth crowd, and in what I did in London, we're now well received. The audience is keenly interested and looking at this kind of like, wow, look, a year ago you could buy anything. You made money. Yesterday, the market went up 500 points because they announced a 75 basis point increase. How does that happen? So in other words, it's not throw a dart at the Wall Street Journal now and make money. So I think, like you said, it's no longer a currency market. It's a commodity market. And I think there's no more valuable commodity in the world. And I think it's something that's, the time has really come. I do like the way he was a good interview because his question truly conveyed the fact that he he wasn't kind of pre-coached on what you were doing because he was way off. He was way off, right? And the fact that I thought it was a very clean way of explaining it to kind of a new, so what do you do? You know, so how far along are you? You know, that was a very well done, Mike. Well done, Padawan. It was very well, no, but it was very well executed in my opinion, because it was easy. It was uncomplicated the way you were.
Well, he's a smart guy. He knows business. And so he was taking it from that point of view. It was like, okay, what is this thing anyway? And so that's why it's valuable. And also, you know, we've been talking about this particular stat. This is that article about how buildings are being required to do their own recycling. But the reason I wanted to bring this up here is that there is a quote right here: residential, and you and I know this, and water and sewer rates have outpaced inflation by nearly 300% over the last decade, while growing urban populations are straining aging municipal water infrastructure. How many times have we shouted this? And now this is like, oh yeah, of course, sure. Yeah, this is what's happening. I'm like,
we knew that. Yeah, they're like, we knew that. You know, I know. That's that.
Don't ever expect to be thanked for being a prophet. Just be positioned to profit from it. In fact, I had a text from a longstanding friend and investor, Paul Fetcher, and he goes, "What is your barrier to entry that prevents other water companies from entering the leased water systems market?" Well, of course, first, we don't compete with the leasing companies. Very, very important, because that's highly commoditized. But so we're actually providing a use type, like the way you use software. But also, the barrier to entry is this network of water companies that we plan to ally by giving them business, and they give us business, and it creates this, what I like to call our supercharger network. Tesla, you could drive across the country on a Tesla supercharger network. Try doing that with a Fiat electric car. Not going to happen. It's, because you'll sit there for 14 hours on a slow charge, whereas, Tesla's got it going down. It's not perfect, but at least they've established themselves as being very hard to beat.
Correct. So, another way I would approach Paul. Hi, Paul. Another way I would, how's things in Long Beach? So the other way I would approach the answer is, well, the barrier, the barrier to end, first of all, being first, there is a tremendous amount of power and velocity from being first, right? And secondly, there are companies that do different aspects of what we do very, very, very well. Everyone's come at it from the water business, right? So they did it in very limited, kind of fits and starts. I think the power of what we did is you and I are not in the water business. I was finance, you were high tech, and we said, okay, fintech. And when we were told, well, you can't do that, we go, why? They go, well, I really don't have an answer for that. I guess you can do it, right? But no one looked at it that way. So I think by going after what you described as the big belly, right? The middle class, the Walmart, right? Walmart's one of the biggest companies in the world, and they sell to people who are generally low to middle income people. They're not Neiman Marcus, right? There's 8 gazillion Walmarts where there's only a handful of Neiman Marcuses, right?
Paul says, by being first, we become the gold standards by which others are measured.
Brilliantly put, Paul. And I couldn't have said it better. And I think that, and I've been asked that a lot. And I say, look, alacrity, there is a lot to be said for alacrity and to move quickly. But I think we're virtually at that point now where this is our established model. And it would be easier for simply someone to join forces or acquire than to duplicate. The relationships that Dan and Mark have developed over the past 2 decades also are ubiquitous, right? So there's those tendrils that just reach out. So it can be pulled together rather quickly now.
By the way, this week is the 25th anniversary of Progressive Water Treatment. So we acquired them in 2015. In other words, 7 years ago. But they'd already been in business for the full
18 years prior. Yeah, and I believe that his dad ran the business for years and years before that. So I mean, that general business has been there for decades and decades. Sure. Well, happy.
Yeah, it's a happy anniversary, Mark and Mike Jenkins and the whole team. They are truly amazing in McKinney, Texas. They are flat out. You go see that plant right now. You can hardly walk through there. There's so much being built. It's ridiculous. We're very proud of them.
That's terrible news, right? I will say that When I used to try to describe this to investors a year ago, I really had to get into the weeds because they just didn't, they didn't make the, now I have more and more people, especially in the, I think, and look, I truly believe this is because we're dealing with much higher net worth individuals who are far more sophisticated in general, but they're finishing my sentences. They're like, oh, it's like an MLP. Like before I get there, So, So I think, and that's because you and I have had these discussions about how so many different philosophies actually repeat the same mantras in slightly different words, because truth is wisdom. A good way of doing thing is a good way of doing a thing, right?
No. It's amateurs borrow, professionals steal. It's as simple as that.
Okay, we'll take it. But the reality is that it's not an accident that solar exploded in the last 2 years using fintech, deploying $1,000 investors, the Reg A investor, pooling together thousands of investments and launching water systems. I mean, not water systems. Listen to me. Power plants in Africa, delivering a quality of life enhancement to the developing world. That same model, however, deployed into fintech for water, would literally bend the curve of the loss of human life in that same area of the world, which is an incalculable.
But even in places like California, that's the shocking part. Look at the water quality issues.
Right, it's not killing you now, right? There's literally people dying. Like you hear about 6,000 people, right? And we know, we know that the cancers and the neurological disorders and people dying. We know that it's very, very, it's almost certainly environmental. Now, no one is ever going to fund a study to nail down the actual cause because of the liability attached to finding out it was the water. Okay.
Well, the problem, for example, in the Midwest with farmers coming down with brain cancer because of the Roundup.
These
what they call it, glioblastomas, these terrible brain cancers. And it's this thing that, water permeates us. We are mostly water. And so, we need to detox the world in a way.
And that's exactly what we're doing, right? We're detoxing the world, and that's a big, big job. So I will say one other thing. I think the way you, in a very clean way, describe the fact that this is a massive job that no 100 people could ever pull off, right? It has to be a network. It has to be fintech. It has to be it's the money stupid, because there are tens of thousands of companies out there with pipelines that they're stuck with because the guy keeps going, I need it, but I can't afford it. Remove that barrier, remove that pain point, and you literally open up the world for the type of treatment that it really needs.
Yes. And in fact, the deal flow of evaluating these deals has dramatically increased. Manuel was going, oh my God, which is like, yes, great, perfect. So we're madly evaluating the deals. There'll be much more news on that. It's kind of like when those locomotives go, shoo, 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 right?
They slide. The wheels were sliding at first, right? Right. They slide and then they start to catch, right? We're at that point where it's starting to catch. Look, I commented to you, the overwhelming response I'm getting from the investing public of people looking to, that is a sign that, well, first of all, I think the world's catching up. That oh wow, this is a thing, and I think if we're kind of finding a way to communicate this in a way that isn't like, huh, you know what I mean? I think that was part of the. I mean, look, we knew what we meant, right? It was hard. It took a little bit to, kind of translate, our language a little bit, but I think that message is being conveyed very, very well. I can't wait to talk about in the next week or two, hint, about our next phase.
Which is why I was doing that big cliffhanger on that shareholder letter. So with that, I'm going to cliffhang. I hope that I can talk about it next week, this big thing.
And to the folks that call me this week, I am sworn to secrecy. Okay. you can put bamboo shoots up my nails, but I can't do anything until I can do it. But
good job, McCain.
So that's it.
Listen, thank you, Ken. Thank you all for being here. Thanks to Ivan Ants for touring the American Midwest on our behalf. Thanks to all of our amazing shareholders. You guys and gals rock. And with that, I'm going to wrap it up for another wonderful CEO briefing. Have a good night, all.